Okay, in today's video, we're going to talk about Forex reversals. And when we talk about Forex reversals, we're going to talk about trend reversals. A currency pair is trending in one direction and then it reverses course. And this is one of our lessons. It's lesson number 9 in our 35 lessons at forexearlywarning.com. So basically, there's several types of reversals. There's actually 3 types of reversals. We're going to go through all 3 of them here today. Okay. So you have a currency pair that's been moving in one direction, let's say down for a long time. It builds a consolidation phase. You set a price alert for a breakout back for the reversal. It hits the price alert, and then you can look to buy that particular pair. So these are our free trend indicators, our exponential moving averages. This is the D1 time frame. So this is a big down cycle. Then the currency pair builds a consolidation or a cluster, okay, and then it reverses course. You can set a price alert right here, and when it breaks out of this cluster and starts going up, you can take back a lot of these pips here on a reversal. This is the H4 time frame. Currency pair comes down, 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 consolidates. Since this is the H4, it's building this support cluster. This is the Canadian dollar Swiss. Works for any pair though. And tomorrow morning, if there is a Canadian dollar news driver or something like that, or a Swiss franc news driver, it could drive a reversal right off this support level. So when a currency pair comes down and it reverses, it's usually driven by news. So this is the Canadian dollar Swiss, so this might be Canadian dollar news or Swiss franc news. Just look at the news drivers on the news calendar. If you want to learn how to set up these trend indicators, you can click right here. This is a type 2 reversal. This is the second type of reversal. And this is on a pair that's just ranging. It's just normally, naturally ranging. So this pair, this is the British pound yen. It's ranging. It hits the support and it starts to possibly range back up here on the D1. That would check the H4 time frame also to see if it's pointing up. So if the British pound starts to strengthen, you'll be able to see the next reversal. Or if the yen starts to weaken. Okay, you can check the smaller time frames to see if they're building momentum using multiple time frame analysis. Once again, you can set a price alert here. On these normal ranging pairs, this is a lot of upside potential. This is 500 to 700 pips of upside potential on this volatile pair. But this is a reversal, but it's normally off of a support level, and this pair is ranging, okay? It hits the support, it builds the support. This is a big time frame like the D1 time frame. So it hits these numbers here. It starts to reverse. It starts a brand new trend, and you can estimate your upside potential over 200 pips. This is the next type of reversal. This is a third type of reversal, type 3. And this is like a V-shaped reversal. It's a sudden reversal. So you have a currency pair that it's coming down, 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 and it just does a sudden reversal. Right back up, just boom. Going in the opposite direction. About 90% of the time, this is going to be a news-driven reversal. So this pair is coming down, down, down. This is the H4 time frame, so this pair has been coming down for, what, 15, 20 days. And all of a sudden, it just does a sudden reversal. This is about a 90% chance that this is news-driven. So you go over to the news calendar. This is the British pound New Zealand dollar. You can see on the news calendar, the British pound has news. And that's what drove the reversal. You know, the numbers may have come in different from what was predicted. And so the GBP pairs are all dropping and trending down. You go to the news calendar, you see the British pound news, and it caused the reversal back up. Now, sometimes you get reversals like this on smaller time frames like the M30 time frame. So look at this. D1 time frame on the Euro USD. Well, each one of these bars, vertical bars, is 1 day. So this pair is not trending, it's just choppy. So probably the smaller time frames are bouncing up and down about every other day. Well, you can have sudden reversals here, but in this case, it's because of the choppiness on this particular pair. And in this case, I would think you would want to trade far less lots and just be real careful. So if the market is choppy and you're getting choppy sudden reversals, chances are they'll be on the smaller time frames. So can you trade reversals? Absolutely. You can use our trade entry procedures. Click on that link there. And for example, if the USD is weak across the board and the USD yen is in a big uptrend but it starts to drop, you can trade the USD yen. That's a mighty big drop there. This is about 138. This is about 135. This is a major drop here. So if the USD yen is in a big uptrend and it stages a reversal, yes, you can trade that with these great indicators we have, like the Forex Heatmap and our free trend indicators. So you can trade reversals. You can even trade sudden reversals. The only one I'd be a little bit careful with would be the choppy market type reversals. So with a great trading system like this, the live indicators and the push alerts, you can trade reversals. As far as the number of lots you trade for each type of reversals, we're specifying that here. I think with the V-shaped reversals, you would trade maybe less lots, but I think that on the rest of them, if you have a breakout out of a consolidation, whether it be a type 1 reversal, I think you can trade basically as many lots as you want. If you have a reversal out of this consolidation cycle, or if you have this type of reversal, just a normal ranging pair, I think that you would pretty much trade all the lots you wanted. Max number of lots. One thing you can do is to avoid getting caught in a reversal. If you sell a particular pair like the pound USD and it's trending down and you're up about 40 pips, what you can do is just move your stop to break even. If you move your stop to break even, then you're starting to eliminate the risk of reversal or getting caught in one. And just make sure your broker has guaranteed stops. So if you're now if you've been in a downtrend in a particular pair for a long time and it reverses, you're still going to keep most of your profits. So you could probably exit this trade manually. I think you could watch the news driver. If it starts to reverse, you can exit the trade manually. And your stop might be way up here or something, and you might have entered way back here, and you might have a lot of profit in this. So, but these are some techniques to avoid getting caught in a reversal. So remember, reversals can occur and will occur at some point on any pair you trade, okay? But I think this guide will keep you on the right side of the trend, get you on the right side of the ranging pairs, and for the most part keep you out of trouble if you're watching the Forex News Calendar. So this is Forex reversals, how to identify and trade. And this is lesson 9 in our 35 lessons on the forexearlywarning.com website.